If you're looking to diversify your investment portfolio and explore property opportunities beyond the residential market, commercial real estate in the UK could be the next smart move. In this video, we'll give you a clear and practical introduction to commercial property investment, what it involves, how it works, and why it's becoming an increasingly attractive option for investors across the UK and beyond. Let's begin with the basics. Commercial real estate refers to properties used for business purposes. This includes office buildings, retail shops, industrial warehouses, logistics centers, and even hospitality spaces like hotels. Unlike residential property, where tenants are individuals or families, commercial tenants are usually companies, which means leases tend to be longer and returns can be more predictable. Now, why invest in UK commercial property? The UK is home to one of the most mature and transparent commercial property markets in the world. Cities like London, Manchester, Birmingham, and Edinburgh are global business hubs with strong demand for office, retail, and industrial space. Even regional towns are seeing growing opportunities, particularly in warehousing and logistics, thanks to the ongoing rise of e-commerce. Let's take a quick look at the key benefits. Higher rental yields. Commercial properties often deliver stronger returns compared to residential. Long-term leases. Tenants typically sign leases that last 5 to 15 years, providing more stability. Tenant responsibility. In many cases, tenants cover repair, insurance, and property maintenance costs, reducing your overheads as a landlord. Diversification. Adding commercial property to your portfolio can help balance risk, especially during economic cycles. That said, commercial real estate does come with its own set of challenges. The initial capital required is usually higher. Vacancy periods can also last longer if a tenant leaves, and the market is closely tied to business trends, meaning changes in the economy can impact demand. So, what are your options as an investor? You can buy a single-unit property and lease it to a business, like a small retail shop or office space. You could invest in multi-tenant buildings, such as business centers or shopping strips. Or you might go the indirect route through REITs, real estate investment trusts, or commercial property funds, a hands-off option that gives you exposure without the hassle of direct ownership. When investing directly, location is still key, but the criteria are different. You'll want to look at business activity, foot traffic for retail, transport links for logistics, and infrastructure developments. Proximity to universities or innovation districts, for example, might make a location more attractive for office tenants. You'll also need to consider the type of lease agreement. Commercial leases can be quite complex, so it's essential to work with a solicitor who understands the market and can guide you through contract negotiations, rent reviews, and legal compliance. Finally, take the time to understand the current trends shaping the market. For example, there's been a shift toward flexible workspaces and hybrid office models. Retail is evolving, with more emphasis on experiential and service-based tenants. And industrial properties, particularly warehouses and distribution centers, are booming due to the growth of online shopping. So, is commercial property right for you? It's a great option if you're looking for long-term income, potentially higher yields, and a more business-oriented investment approach. But it also requires thorough research, a good support team, and a clear understanding of the risks and rewards.